I want to talk about the latest with these markets. We bring into the stream Megan Horneman, Director of Portfolio Strategy at Verdence Capital Advisors. It's good to have you here. And there's a lot that seems to be working correctly in the markets right now. I know that's one of the things you like to talk about. What do you see, even on a day where the Dow might be off a bit after the gains we've witnessed, what do you see that is still playing well in the post-pandemic reopening trade?
So I think one of the things that continues to work well and will continue to work well will be that reopening trade. We've talked about that before. This is some of the cyclical sectors that not only will benefit from the world reopening, but also have lagged over the past several years, your more tech, expensive, growthy names.
Megan, when you take a look at some of the econ data that we've gotten out this week, well, we had consumer confidence yesterday, that number slipping a bit. We also had housing starts pulling back, new home sales, I should say, pulling back just as well. When you take a look at the fact that it seems to be losing a little bit of steam in these econ reports, does that worry you at all?
I think it's something that'll be temporary. Keep in mind that we're kind of stuck in this lull right now. We're stuck in between getting that euphoria out of the way that we had where we reopened and people got back out, businesses reopened, we've gotten a significant amount of people vaccinated. So that euphoria around the world normalizing is behind us. And now the hard work really begins. And we're starting to see some of that COVID aftermath in economic data. For example, you mentioned the housing market. This is part to do with surging prices that has to do with rising lumber prices, rising commodity prices, and all of that has to do with the pandemic. So as we move past this and get beyond this COVID aftermath effects, I still think that you'll find that the underlying fundamentals of the economy are supported by some of these aggressive actions that have been taken by not only the Federal Reserve, but also the federal government.
You brought up lumber prices, and we know that lumber futures actually, when you get into 2022, are actually falling, the prices. So how should an investor perhaps consider rebalancing their portfolio on a 6-month, 1-year horizon?
Yeah, I think that's a little dangerous, especially the situation that we're in right now, because we are in uncharted territory, not only coming out of a pandemic that we've never experienced before, but also dealing with a supply crunch and inventory, the distortions in the inventories that we're seeing, where we haven't seen these levels since around the early 90s. So this is really kind of an uncharted situation that we're in. We would rather look at investing where you have a little bit longer time horizon. Look past this noise that you're most likely going to see for the remainder of this year. Look 18, 24 months out.
Speaking of some noise, I mean, we have to bring up what's been going on in the crypto market because so many investors are now paying more and more attention to some of the moves that we've seen. We see Bitcoin coming back just a bit today, but still under 40,000. How are you viewing kind of the volatility in crypto markets and how it relates to the broader market over the last week or so?
It's just a reminder to our investors why we don't really like investing in the Bitcoin market and don't see it as something that really gives a good risk-reward ratio to our clients. It's way too volatile. We expect that to continue. We think that it has had some impact on the broader market, not necessarily this week, but in the past, because when you see such rapid declines in something that's really just been driven by speculation, it's kind of similar to what we saw earlier this year with the meme stock frenzy. It does have a little bit of disruption in the broader market, but in the end, any kind of disruption we get because of something like Bitcoin, we'll continue to look at it as buying opportunities.
And when you talk about looking perhaps at international markets, that 18-month to 24-month horizon that we were just talking about, would that apply to an investor who might want to rebalance and include some international equities now?
Mm-hmm. Absolutely. The international markets have lagged the U.S. markets not only year to date, but for about a decade now. So there's valuations that look more attractive versus the U.S. equities. And then keep in mind that the international markets, specifically the developed international, they get more of their GDP from exports. So as the global trade continues to improve and we really work out these supply crunch dynamics, that you will get those economies that should benefit more than the U.S. And then lastly, because they're more export driven, their stock markets tend to lean more cyclical. And that's the area of the market that we would focus on right now.
Megan Horneman, Director of Portfolio Strategy at Verdence Capital Advisors. Good to see you again. Thank you for being here.